more things change, the more they stay the same, so the saying goes. That's the story of 2012. New faces, new attempts at tackling the world's economic problems, but still the same old malaise. This week, a special edition of Counting the Cost dissects the failings of 2012 and asks, will 2013 be any better?
Hello everyone, I'm Kamahl Santamaria. Welcome to this last edition of Counting the Cost for 2012. As we do every year, a year in review discussion show with three leading economic and business minds from around the world. We're going to introduce you to them shortly, but first, let's just talk a little bit about this year that has passed. Now, last year when we did this show, we talked about 2011 being the year that wasn't supposed to be, the year where all the talk of growth and recovery was replaced by the exact opposites. Sounds a little familiar, doesn't it? Things just haven't improved in 2012, particularly in the Eurozone, which is in recession, but also think about the United States with its fiscal cliff and a slowdown too in China. So to get us going today, a quick economic trip around the world to see just what sort of state things are in.
It's been a bumpy old ride for the world's economies in 2012, nowhere more so than Europe. The EU and the IMF finally reached a new deal to ease Greece's crippling debt and to release vital rescue loans. But that meant little to the millions of Greeks suffering from nearly 3 years of budget cuts. Spain too continued to struggle under the weight of its debt problems, but has so far held off seeking a major bailout from the Eurozone. Elsewhere in Europe, it was a year which saw a highly successful Olympic Games bump the UK out of recession, for now at least. But not long after that came an admission from the government that the recovery of Europe's second biggest economy is taking longer than originally hoped.
It is a hard road, but we're getting there.
Britain is on the right track.
And turning back now would be a disaster.
It's also been a year of new faces among some of the big players. France said goodbye to Nicolas Sarkozy and his austerity measures, and elected the more stimulus-minded François Hollande, the first socialist president in 17 years. Anthony Samaras took the helm in cash-strapped Greece, and Xi Jinping became China's new leader, presiding over an economy still ticking over nicely compared with much of the world, but its continued slowdown could have far-reaching consequences. Japan, for example, joined the sick list as Asia's high flyer from a generation ago slipped back into recession. And they say when America sneezes, the rest of the world catches a cold. Maybe don't call the doctor just yet, though. Many Americans are still feeling the pain from a lack of jobs, but the world's biggest economy showed some signs of life in its long and slow recovery from the recent recession. It was all just enough to get President Barack Obama re-elected for a second term. But the US economy's future growth will also depend on the tough negotiations with Republicans over the US budget and the efforts to avoid the so-called fiscal cliff, a stinging package of automatic tax increases and spending cuts.
All right, so let's get down to it now and introduce our esteemed panel for today. We start with Rajiv Biswas in Zurich. He is the Asia Pacific Chief Economist at IHS, a global market information and analytics company. Also, he's the author of a new book called Future Asia. In London, we've got Razia Khan. She's the head of research on Africa at Standard Chartered. And joining us from Stockholm, the CEO of the telecommunications company Ericsson. Very pleased to have Hans Vestberg with us. Thank you all for your time today. We really do appreciate it, and we've got so much to talk about it. I think we have to start in the Eurozone. So Rajiv, in Zurich, I might come to you first of all. I know you deal with Asia Pacific, but just tell me about life in Europe, in your opinion, from a year ago. I feel like I could have almost rolled out last year's show because it's just not changed, really.
And that's our expectation for next year. We expect the protracted recession in the Eurozone to continue next year with growth of about minus 0.4% for the Eurozone as a whole. But it's a region with many differentials. Obviously, the worst affected crisis economies, Spain, Portugal, Greece, are in dire straits still and will continue to be in deep recession. But other countries, such as Germany, have fundamental strengths. And we do expect that over the next 2 years, a gradual improvement, particularly Germany, France, and also the UK, gradually improving. So I think the outlook is for still recessionary conditions in the year ahead, but a very slow recovery after that.
Right, you've mentioned Greece, and we're going to go into that in more detail in a moment. I just will bring in Hans at this point as well. Seeing as you are there in Europe, and you're the head of a company with, and correct me if I'm wrong here, around 100,000 employees. You're a big player there. Tell me how recession and downturn in growth affects you when you're dealing with that many people, when employment is such a huge issue across the continent.
If you look at our company just quickly, we are in 180 countries distributed all around the world, and we have more than 100,000 employees, but they are all around the world as well. And I tend to agree a little bit that it's hard to generalize on the whole world, and even on Europe. We have had regions or markets in Europe that has been very weak for quite a long time. Basically, as it was said in the beginning, no change since last year. But there are also markets in Europe which actually is quite okay when it comes to spending. I think in general we are working with the infrastructure, technology, mobility and all of that, and that has consumer demand still in many places in this region as in the rest of the world. But clearly we see a couple of markets, especially the markets mentioned, Spain, Greece, etc., have been down, but that has been going on for us for quite a while. Then, of course, we have now less of our sales in Europe than we had before, but still Europe is not the biggest region for us, but it's an important region both for employee point of view and business point of view.
Right, so Hans has made the point about his company being spread out right across the world, and I guess that leads me to the idea of exposure. Razia Khan, I might bring you in, Head of Africa Research at Standard Chartered, to tell me about how places like Africa, for example, exposure to Europe, how are they coping with that sort of thing?
Well, if there's one relatively bright spot in the global economy, of course, we are looking for an Asia recovery in 2013 at Standard Chartered as well. But Africa really does seem to go from strength to strength. We have seen, since the global economic crisis, this improvement in trend growth. And even though the expectation is that Africa will not be immune to the fallout from Europe, after all, is Africa's largest trading partner still. There is a domestic momentum behind growth that continues. So for 2012, the IMF were looking at 5% growth. They've looked at forecasts for 2013 suggesting 5.7% growth. Our own forecasts a little bit more subdued than that, but at 5%, Africa's still going strong and improving over the medium term.
Let me just read something to all three of you. If we've been talking about the future in Europe, I want you to have a look, well, our viewers can look, it's a quote here of what Greece's Prime Minister Antonis Samaras thinks. He told the American Hellenic Chamber of Commerce only a few weeks ago, he said, 2013 is a turning point. For the first time, we will see signs of recovery. Rajiv Biswas in Zurich. I mean, for the Prime Minister of Greece to be that sort of, or to have that sort of optimism, sounds quite extraordinary, really.
Our own view is that Greece still faces very severe problems. We expect continued deep recession to be, in 2013. Unemployment now is over 25%, and with growth so negative even into next year, the outlook is still very bleak. The fundamental problem in Greece is they don't have a very strong export economy. Apart from tourism, there aren't big drivers for the recovery of the economy. And so it's hard to see much good news about how this economy is going to turn around. Fiscal austerity on its own is not resulting in any improvement. So I think Greece remains a very severe downside risk for Europe, and there's still a risk of a Greek exit from the Eurozone next year.
Can you give me a quick word on Spain while I've got you there as well? Your thoughts on it, because you've started to bring together the other issues of unemployment as well.
Spain is one of the big five economies of the Eurozone, and it unfortunately has started to look somewhat similar to Greece in some ways. Its unemployment rate is 25%. It has a deep depression in its construction sector, which was a key driver for the economy for 2 decades. And the problem is that's dragging down the banking sector with it. That's why they needed a €100 billion bailout from the Eurozone in order to bail out the banking sector. And the prospects for Spain, although next year will still be a recession, are also for continued deterioration in the government debt to GDP ratio. So Spain is also increasingly coming into focus at the center of this Eurozone crisis. despite the efforts of the Eurozone to try to provide further assistance to Spain. And it looks like now Spain will need a full bailout package, not just for the banking sector.
Folks, we've touched on unemployment, and I would like to go through a few unemployment numbers just quickly before I return to the discussion, because really it is the measure which tells us the most. And what we're going to do is compare with this time last year, again, when we did this show last year. United States, first of all, jobless rate fell to 7.7% in November, which is the lowest in nearly 4 years. It was 8.6% a year ago, but may have only fallen because more people have actually stopped looking for work. The UK, 7.8%. It was 8.3% a year ago. But then we get into the nasty numbers, and Rajiv's already started talking about these. Spain, 25%. It was 22.6% last year, nearly 5 million people out of work in Spain. Greece, a record 26%, and it was a huge jump as well. It was only, I say only, 17.5% this time last year. The 26% is more than double the Eurozone average. And then we've got Asia as well, which we'll talk about with Razia in a moment, and Rajiv in a moment. Japan's unemployment down a little from last year at 4.2% compared with 4.5%, and China officially at 4.1%. But it's been that way for the past 8 quarters, and there's perhaps a belief that the real number is much higher. Hans, let me come to you first of all. Again, I make this point that, you run a big company. I know a lot of your employees are outside of Europe, but unemployment is everywhere. How do you maintain business confidence? How do you carry on in this sort of environment?
I think first of all you need to remember that we have been around for 137 years, and we have been in all markets all around the world when economies come ups and down. Of course you need to dimension your business volumes towards how much employees and resources you have in a certain country, and so we have done for quite a while. But again, they're different from different markets, and even though you can see markets which are in a sort of a downturn economical, you can also see that they're investing not only in physical infrastructure, but they are sort of investing in the next generation ICT technologies. Everything from mobility, broadband, and all of that is needed. And I think that's also my talk to governments all around the world. Of course, fiscal austerities and cost reductions is essential, but it's also to find growth. And growth is coming from not only doing physical infrastructure, it's also to deploy new types of technologies that brings GDP growth.
So
I think
in
that
other words,
balance is very important.
Sorry to interrupt you. Don't shy away from hard work and all of this just because the environment is not conducive. Actually go out there and make something happen.
Absolutely, and I think, of course, it's scary with the high numbers on employment, but it's also go there and try to find ways to do competitive advantages out of it and see that you can actually develop as a country or as a company. And if you have been in these countries for so long, I mean, our commitment is to stay with those countries and with our employees and see that we continue to be there. It's going to be an upturn one day, and Europe has been good before. Now, US is good for us, and Asia partly is good in Africa. But if you're long term, it's going to come up and down, and you need to be really committed as anybody else are in those markets.
Razia, this takes us back, doesn't it, to the whole austerity versus stimulus debate, really, doesn't it? Austerity has been all over the place, and yet the jobs are just, as Hans was just saying, jobs need to be created in those times. What's your view on stimulus versus austerity in this current situation, Razia?
Of course, this debate has been key to a lot of what policymakers have focused on in 2012. And nowhere are we going to be closer to this than in terms of the negotiations that are in place to try to avert the fiscal cliff that the US economy is facing. I think the recent discussions on this matter, the very key negotiations that are underway at the moment, suggest that more needs to be done to provide a stimulus. The peripheral countries in Europe have had the dose of austerity medicine. That has resulted in already very negative growth for some time, with the outlook remaining very poor. Even as the markets get somewhat more encouraged right now, we've had good developments in terms of plans for resolution, the agreement on a single banking sector regulator, things slowly falling into place in terms of the resolve to do something about this crisis. The missing ingredient here is just how much can these austerity programs be rolled back? What room is there going to be for fiscal stimulus in an environment where fiscal stimulus, of course, becomes that much more significant, that much more powerful in terms of its ability to drive growth?
We've looked at Europe, we've talked about the United States. I think it's China now. And Rajiv, I'll do this with you, seeing as you are Asia Chief Economist there at IHS. China still has strong growth, obviously, but the slowdown is there. Now, I've sort of called this China's inevitable slowdown because it had to happen at some stage. You know, it couldn't be that tearaway growth for so long. Do you think it's controlled enough to not have, you know, a huge knock-on effect with the rest of the world?
I think you're right that China had to have some sort of transition away from that 10% per year growth that it enjoyed for 30 years. And our expectation is that China will be growing at about 7 to 8% per year over the next decade. I think what we've seen this year is some cyclical moderation in the momentum of the economy. I think it troughed in the third quarter, and the recent data is showing an improvement. So we're already expecting some improvement into next year for China. The latest readings that we're seeing on industrial production, on the purchasing manager indices for manufacturing are showing an improvement. And infrastructure spending is picking up quite significantly due to government stimulus measures. Right. So we do expect some improvement into next year with growth just below 8% next year, but it's not a dramatic bounce. And I think the key issue is what will happen in the export sector, because China is still very much reliant on export growth engine. And this will depend on what happens in Europe and the US. I think, as I say, Europe's going to be in recession.
Sorry to interrupt you, just while we make that point about the exports, do you think the Chinese leadership gets this? And I guess particularly I'm talking about the incoming Chinese leadership. There is a change there. And the understanding that the domestic economy has to grow, internal consumption has to grow, because you just can't rely on exports as much, even when you're China, even when you are the world's factory.
I think China understood that after the global financial crisis, when the export engine, slowed very sharply. They realized they needed to make that transition. But for 30 years, consumption as a share of GDP in China has been gradually declining. It's now only about 1/3 of GDP. And although they are trying to make policy changes to shift that to a much higher level, it's going to take some years. I think we're looking at a transition of about a decade, perhaps even longer, before we see a significant change in the share of consumption as a share of GDP. But I am convinced that that is going to happen, even though it's at a gradual pace. And that process is already beginning. Policy measures are a priority in this area. And I think certainly in the 12th five-year plan that we're currently in China, the government is focused on that. And I think the new leadership is also focused on making necessary structural reforms. Consumer demand will be an increasingly important driver for China and for the rest of emerging Asia as well, and less reliance on export demand out of the OECD countries.
Razia and Hans, I'm going to come back to you two in just a moment. First of all, I want us to get the crystal ball out and do a bit of predicting, or at least actually see what the International Monetary Fund's crystal ball is predicting for 2013 as we start to look ahead. It's saying the global economy will pick up a little, growing about 3.6% next year compared to the 3.3% this year. If we zero in a bit, the US, about 2%, which is about the same as this year, so kind of stagnant there. The Eurozone, though, that will really stagnate, just 0.2% growth after contracting a little this year. And then we go further afield, we've just been talking about China, the IMF predicting 8.2% growth there, 6% in India, which is still pretty strong. And strong expansion in sub-Saharan Africa. Economies there are expected to grow 5.7%. Interestingly, though, South Africa, the IMF says, will lag behind because of its links with Europe. Razia Khan, head of Africa Research at Standard Chartered. What do you think about that, Africa's prospects, not just for the year ahead, but also what Rajiv was talking about, China as well, because the Africa-China relationship is quite important?
Absolutely, and as has pointed out as well, we have seen this improvement in the higher frequency indicators from China. Although, if we look at China-Africa trade on the whole, that of course has grown tremendously. We were looking at bilateral trade numbers of around $7 billion at the end of the last decade. By 2011, that had increased to $166 billion. And even though in 2012, one of the key themes has been the slowdown in trade between China and the rest of the world, actually, when we look at the China-Africa numbers, they've slowed by a lot less. In real terms, the change has been negligible. So there's an expectation that that is a strong, medium-term structural trend. We are going to be seeing greater engagement between China and Africa. That doesn't look likely to turn around anytime soon. That will not be impacted by cyclical factors. What about the rest of the world? We've already spoken about the vulnerability that Africa does have to the Europe slowdown. And yes, that is one of the factors impacting South Africa's particularly weak performance at this point in time. However, there's a lot more behind South Africa's performance. Since the global economic crisis, South African growth has largely disappointed. There was a consumption boom in the country ahead of the crisis. It's really struggled to revive its economy since then. Political factors as we move to the ANC's internal election. Lots of debate about the kind of changes in the broad thrust of policy that might be needed to turn the economy around. But investors increasingly concerned that unless South Africa can see a sustained improvement in its growth rate, the calls for more radical policy options are going to grow, and that may not sit very comfortably with investors. So on the one hand, you've got much of the rest of Africa pulling in the right sort of direction, really stellar growth from a number of countries, more than a handful of African countries that will succeed in growing over 7%, perhaps on a sustained basis. But South Africa, the region's largest economy, really the laggard in this case.
Folks, we're starting to run down the clock now, so I'm going to leave the final word over with Hans in Stockholm, because we've had some great political and economic commentary from our other two guests. I always like to hear what a business person actually has to say, how you genuinely feel about your prospects, about just general business confidence for this coming year.
I think a lot has been said, and of course the word are in many facets. And I just comment on China there. I think it's quite natural, of course, with the shift that they're doing there, that there are some slowdowns. I can say from a business point of view, the usage of mobility, mobile broadband, mobile phones, that is continuing to be the same. So we see the technology at least being a very important infrastructure for China and doing investment, and they are now planning for 4G. So that's one thing. So the slowdown we have seen in China for 2 quarters has been more of a technology point of view, not driven from consumer demand for mobile broadband. And I also would like to say about Africa, I agree, Africa has a tremendous potential, and of course, for transformative purposes, using technology is extremely important, and using mobility, internet connections for getting education, healthcare up in Africa will drive the GDP, and we see those attempts. And it's a clear correlation between the mobile broadband penetration and the GDP, sustainable GDP growth. So that is very important. And lastly, probably mentioned in US. I mean, US is by far our largest market, and it's by far the most advanced technology market at this moment, even though, of course, it's a lot of discussion about the fiscal cliff, which ultimately, of course, can increase sort of the taxes that will reduce spending. So far, the drive for consumers of new technologies and the investment in infrastructure that is not only physical infrastructure, meaning ICT infrastructure as well, that is continuing, and we have seen so far up to this third quarter a great investment level in North America, actually the market that is growing the fastest for us. So I think also many countries, governments, companies are doing as they've always done. Look at how you can be more efficient, but also look how you can grow and invest for growth. And I think that balance we need to see in any business, in any country, that you have stimulus at the same time that you actually need to cut costs. And that's our daily life, and we have our governance. and countries have their governance, which we need to understand. But I think that mentality we need to have all the time, regardless if we're in Europe or in Asia, Africa, or in China.
Well, listening to you at least, Hans, I feel a little bit confident about the coming year. I'd like to thank all of our guests. We had Rajiv Biswas from IHS in Zurich, Razia Khan from Standard Chartered in London, and you just heard speaking there Hans Vestberg. He's the CEO of Ericsson in Stockholm. We thank you all for your time and your insight today. And that is Counting the Cost for 2012. So let me just say a big thank you to the team, both editorial and technical, who work so hard to bring you this show each week. We've got some plans for next year. One of them involves this studio, so you're just going to have to join us again on January 11th for our first new show of 2013 to see exactly what we have planned. If you want to get in touch in the meantime, though, please do. You can tweet me at Kamahl AJE or our business editor at Abid Oliver Ali, or you can drop us an email as well, countingthecost@aljazeera.net. Also, if there's something you'd like to see again from the 50+ episodes we've done this year, you can do that at aljazeera.com/business. Just link on to the CTC page. Our entire 2012 back catalogue is up there on demand for you to catch up on. So thank you for your company, both today and right throughout 2012. I'm Kamahl Santamaria on behalf of the Counting the Cost team. Happy New Year, and we'll see you again soon.